Hey guys, welcome back to FOMO Czar, where we research everything crypto. Before I begin today's episode, I'd like to make a short disclaimer. I'm obviously not a financial advisor. That being said, take everything I say with a grain of salt and always do your own research. I wanted to cover a Tradingview in this episode just because I noticed that a lot of people don't use it when it's kind of staple to crypto and stocks. So I thought I'd probably cover this just to make sure that you guys are aware of it, just in case, I'm sure you are. But if you aren't, definitely something you should use, right? Because it's free. But anyways, so TradingView, you can start on it by just going on TradingView.com, and you can create an account by just clicking Getting Started. It'll take you to this page. We don't want to be paying nothing because even though these are really really good deals on really really nice indicators, we have no use for them because we're pretty basic. And so to get the free version, you can just click on Try Basic, and it'll take you here, right? And so let's log in, and we're logged in. All right. So off of here, you just click on Charts, and it'll take you to this page. It's just from random page. If you don't like the appearance, you could always change it by clicking appearance here, right? Click OK, and now you're ready for TradingView. Okay, you don't need to go find a YouTuber to tell you if the market's bearish or bullish, because now your portfolio is in your own hands. All right, so some key indicators you should probably familiarize yourself. I would say it would be like moving average ribbons and like RSI, just because those are very good indicators for starting out at least. And like, yeah, you don't need to overload yourself with indicators, because there is such thing as too much indicators, right? Because then you're overthinking something, right? So yeah, I think it's good to keep it simple, but you do need more than one indicator to be more confident, because one indicator on its own is something, but a few indicators trying to tell you the same thing together is a much more stronger signal, in my opinion. So let's start off with moving averages. So a moving average ribbons are a series of moving averages of different lengths that are plotted on the same chart to create a ribbon-like indicator. Traders can determine the strength of a trend by looking at the distance between the moving averages, as well as identifying areas of support and resistance by looking at the price in relation to the ribbon. These ribbons can also be used to signal potential trend changes when the price moves through the ribbons or the ribbons cross each other. So basically what it's saying is the trend changes when the ribbons flip. Okay, if they flip down, it's going to be bearish. If they flip up, it's about to be really bullish, right? But like people are using like indicators, right? So whales are also aware of this. Like this is not like breakthrough knowledge that I'm showing you, but it is ironic because common sense isn't so common these days. Because I guarantee you that a lot of people have no idea what TradingView is, even let alone moving ribbon averages. Anyways, this is my due diligence to let my brothers know if they don't, right? So this is what we're doing. So yeah, pretty good indicator, I would say. It's way better than relying on one moving average and waiting for a bull cross, because that's a lagging indicator. While this is it's pretty on point, in my opinion. So key takeaways are: a moving average ribbon is a connected series of sequential moving averages. So a bunch of moving averages on different time frames. Plotted together to kind of see the overall trend that it's following. A trader determines how many MAs are used to create the ribbon, as well as the look back period of each ribbon. When the price is above the MA ribbon, and the MA are angled upwards, it helps confirm a raising price. When the price is below the MA ribbon and the MA ribbons are angled downwards, it helps confirm a falling price. When the ribbons expand, it helps confirm a strengthening trend, but when they contract or cross, it indicates a pullback phase or even a reversal. That's exactly what I'm saying. Right? So to visualize that, what happened here? To visualize that, let's actually put them on here. So if you just find your chart, and if you wanted to add something, you could just click on the plus symbol right here, and you got your stocks, futures, forex, crypto, anything, whatever you want, index, bonds, whatever. Okay, so let's just take Bitcoin for example, right? So we can go here on templates and find the MAEXP ribbons. So that's the ribbons we're talking about. Just click on the star. You can only have one indicator at a time when you're using the free version. So there's that, but you don't really need them both at the same time. You could just switch back and forth. You know, it's not like you forget. But another thing that the paid version gets you, right? But we don't need that. We're not that fancy. We don't need to be that fancy. So we can see these ribbons, they were contracting around 62K. So had you been paying attention to this chart and noticed the ribbons are contracting and they crossed downwards, you would have already known that we're entering into this bear trend, right? And then there's a dip coming. And when the ribbons continued flaring downwards, you would have been even stronger in your conviction that we're in a bear trend for real, right? And when it refused to cross up, even when the momentum was keeping up, you got even more conviction that we're in a bear trend. And right now, it is not even trying to cross up, right? So we're waiting for that cross up, and that would indicate a trend reversal, right? But we need to reach a bottom first, in my opinion, right? Because until we reach a bottom, it's just going to keep falling like this, right? Like for example, you notice here, falls, 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 and it starts picking up, and the moving average starts contracting, right? As soon as it starts picking up, right? So even if you got in here, which wouldn't be too late, you'd be good, right? Because you would see this, and it contracts right here, nice pullback, but then it reversed, right? And you'll see it. You'll see it. I think, in my opinion, I think it's way better. It's way better than not using anything, because a lot of people don't use anything. Okay. Another indicator I would say would be RSI. So the relative strength index is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes, and can have a reading from 0 to 100. The indicator was originally developed by J. Wells Wilder and introduced in his seminal 1978 book, New Concepts in Technical Trading Systems. So basically, what we're trying to see is some RSI. So for RSI, you can just click on oscillators, click the favorite, and it'll open up this bad boy right here. So we get rid of some things. Okay. So basically, what that explanation was trying to say, that if it's under here, oversold. If it's over this, overbought. So you notice how when it's here, it was above here, it was overbought, and so we noticed a sell-off, right? Right here, it was oversold, we ended up seeing a nice reversal. Not for long, but for getting a better sense, you can just move to a bigger time frame, and you'll be able to see it better. So it's been oversold for a minute. So it was overbought here, and yeah, we would agree that it is overbought here. But check this out. So it's kind of reaching its bottom, but not yet. Not yet, I would say, because we have yet another indicator, which is volume. You notice how the volume has not picked up still. So when we see some volume, and we see this guy much lower, like even right here, and we see these ribbons crossed up, or at least a shift in momentum, right? We know that there might be a trend reversal coming, but until then, there's nothing. There's nothing. You know, it would be just hoping if you're hoping for a trend reversal at this point right now, because you'll see it. You'll see it here first. You will see it here first, regardless of me being right or wrong. And look, this thing is trying to cross down on the ribbons. This thing's trying to cross down on the ribbons. So last time and it actually, yeah, it's touching it. It's touching the next moving average, man, on weekly. Okay, so Bitcoin's looking pretty bearish on weekly, but I'd say bottom pretty close, pretty nearby. You know, we're probably gonna see something like this, just on a longer scale, right? Yeah, Tradingview is pretty cool. So you have a wide array of things even here to help you kind of get a nice picture, right? You could use just one trend line, or you could be a fancy guy and be like, oh, I know what's happening. It's gonna be something like this, right? And you're like, oh, I want to do what the cool YouTubers are doing. I'm just joking. So hold on. Make it look right at least. Something like this maybe? Oh, that looks that actually looks kind of nice. Right? Maybe we wanna be a little bit more fancy. No, we don't want to be that fancy. Yeah, I have no idea what I'm doing. Okay, but I think it helps. I think it definitely helps. I think it definitely helps understand what's how to at least visualize. Like, come on, I didn't need to do this. It doesn't even have to be right. It doesn't even have to be exact. But just to visualize it, rather than waiting for some YouTuber to supply me with some juicy content, you guys could be out there and making your own analysis and assessment. Cause who cares if you're wrong? Everyone's wrong. The market's the only thing that's ever right, and you have to adjust to it accordingly, right? So that's pretty much it. Let me know if you guys think this was cool or not. You know, we don't really like to get into anything too much, just because then you get bored of it and then it's not fun anymore. So we want to keep things fun, and technical analysis is pretty fun, in my opinion. But never ever leverage, and I think you'll be okay, because eventually the market just corrects itself either way, right? So that's all for this episode, and I'll see you guys in the next one. Comment if you guys wanted to hear about something else and I missed it, or if I could have covered something a little bit better, right? But until then, Czar out.